Good morning, SMF Street, SMF MMT, SMFProTrader.com, SMFStreet.com, SMFHotStocks.com, DailyStockCharts.com. How many other ones would you like me to provide for the innocent to be able to go and view all of the SMF manager websites, so that you can get to know them clearly, and you can also get to know them as there was that super gap, that pullback, and that's that Apple, and that's that burn that trade on that one. Let me tell you another thing. The 590 call, we juiced up on it yesterday. Okay? Let us not forget that we're still holding right here, and our price is $4.60. It just marks it at $8.92. That's not what we own it at, but it doesn't matter. What matters is we got 15 of these $600 calls that were bought, and they'd already made a new higher high. And what we're going to do with the SMF MMT market makers is we're going to be happy to bring up our option volume brain, pricing brain, volume brain. And what we're going to do is take a look at where these go and why they go where they go.
Great.
Now, we all know that we also got the 580s yesterday. So let us not be in denial. Okay? And because, you know, we live for telling the truth. In real live time market action where only truth can be told. That is the power of the SMF model versus other models. And I'm just going to show other MMTs. That Amazon high, that MMT Scotty just talked about, that's that pullback. These are these big breakout bars that have been happening in all of these names. Right now at 7:14, we're about 45 minutes into the tape, MMTs. Most important thing, MMTs, that equals 3 15-minute standard buy action buys. Now, I'm going to pull up your famous trade again. I just want to monitor that that CMG made another high, okay? And Netflix has been consolidating up at the highs, and we got the Amazon trade working at highs. Then we have this wonderful stock challenging its intraday highs right here, right along with all of the call contracts. The 580s were purchased yesterday. You know it, because we traded them, and we have the live videos to also let you go back and reference to. And these calls were bought for the volatility gap and sold, and we're looking at getting back in there, and we remain to hold these calls over here, not to mention several other hundred. We examine what the brain, the market maker brain, is this one right here. And we're burning the clutch up here, and we're 0.80 high. If we break that 8.0 intraday, we're going to break right through those top, my MMTs, because you will. And not only that, we're going to see from that open to that pullback to another right-hand shoulder breakout in price action, market maker price action with a failure bar here. The key is that the failure bars are met with the green bar at the lower 3 teenies up, 3 teenies down. Today, each one of the teeny lines represent 40 pennies in the market maker platform. There's a difference between the retail public and a difference in what we do. And what we do, as MMTs are here, just like I said, you can get to know them by going to their manager websites. Get to know the MMTs that are in the 52-week apprenticeship school. And not only that, ask them why they're there. Because they're there because they can deal with truth. They can deal with breakouts for long positions. They can deal with short positions. They can deal with everything. Because they have graduated into another new world. And that world is a market maker in the exchange model. And on the opening bell, we've been burning higher. We just wanted to cover with the MMTs of what it's like when you're in a bull trend versus a bear trend. When you come back and you start clearing 590.39, was this half bar right here. Over here, we got to 589.70, but we started to clear that number. We started to ace in, and we're going to pull back. So when we pull back, what we're going to see is that that we consolidate in the elevated area up here. What does that mean? Well, that was the closing teeny. That was the initial teeny high. And we're working on right now consolidating at teeny expansion in the MMT platform. That means since we already own it, we're going to let the market makers on the floor, just like we are making a market, same market we make as they make. Thing of it is, though, MMTs, is we're going to let the public drive that price higher. And as we let the public do that, then our excellent entries that we already have go higher. And that Google is an underperforming asset. And 0.74, in order to break the highs on a good breakout, I must break dot 8.0 ratio, market maker ratio 8.0, market maker ratio 0.75, must go higher, must, in order to take out the delta line, I must go north. Look at it, 77, it is trying it, but it's got to break the high. It can't come back down there. Let's take a look at that. Am I going to break that high? If I break 8.0, I go higher. But where do I go? Well, I go over here. I go somewhere like, right now we're printing at 591.71. And basically 592.38 is 7/8 in our system today. And that would be ratio. Trend ratio, right here, elevation here. I've got to break that 8, because if I don't go north, then I can't get up above that teeny line, and then I will have to take my profits as far as the equity goes up toward the highs, and that's learning how to exit and why. But I'm at 78. Am I going to break it? This is live. This is not fake. And all of the call options, we are master market makers. We're not. Hey, if you want to go take some lessons, go on the internet. They got all kinds of books and all kinds of DVDs. Go get those. Hey, we'll show you how to make a market. And the truth speaks for itself. And that is something that people don't get. They don't get truth. And the truth is, in the trade management, execution management, success management, trend management, market maker management is what we do. And we're about to break 8.0, and that's why we can take out that upper teeny line as we did, but we slid that big because we dropped down 0.74. And until we can get up there, we cannot consolidate up above there, MMTs. However, that's just during this price action, but you remain elevated for a period of time here, and 7.4 needs, when you tick down, 0.73, well, the truth is here. The truth is here. You are never going to be misled, Mr. Public Model. The SMF model will help you survive in price action. And the truth is here. It's not delayed. This is real time. And the truth is here. Once again, MMTs, welcome to the world of being a market maker in the equities and a market maker in the options. And this is a 9-minute price action. And this is a 9-minute example that 0.77, right where that pointer is, got to break above 0.80. And if you do get closer to it, you get above it just like that. Now, isn't that the truth, MMT? That is truth. The public doesn't get it. They never will. No one has ever given them truth. But a market maker, that's what we are, and we do give truth. And there's 8.0. Just hit it, but it didn't break it. And if you break it, just hit it, but it didn't break it. Live here and now. Option prices are burning, 590, 600. And let us not forget the 580. Making higher highs. Why? Because that's close to 100. That means that price action And you, oh, 8.0, 8.0, there it is. All points, MMTs. Am I going to break that ratio high breakout? That's what, oh, it didn't do it. It slid right back below it. So it couldn't keep going. But it's very strong here. And when we break those highs, one delta up today just so happens to be 593.18. And 7/8 is 592.38. And we are challenging above the high of the day. We just made another high. Oh, 8.0. Am I going to break it? Nope. Came back down. That's why I can't keep breaking higher. Let's watch it. 96. Thrombone. 99. Uh-oh. 8.0. Intraday high. That's what
new low on the VIX. 90% on the NASDAQ 100.
Okay. That's nice. I'm being updated on what the NASDAQ 100's doing, MMTs. Now look at the weakness build because I can't take out 8.0. Yes, I'm elevated. Yes, that is strength at the top of the price action zone. That's right here. Right up here where that wick is. And what we want to do is see that your ratio breaks above 8.0 to break that high. Okay? Because it has to do that. To break out above it. Once again, this is Google. Once again, Google is 7 minutes short of the first hourly bar. Special Google trade.